This is the only 1-minute scalping strategy you will ever need. It's built from 7 years of experience and based on just 3 steps using only 1 rectangle and 1 pattern to catch sniper high reward to risk trades like these. This mini course gives you everything you need in under 30 minutes to take your first trade, plus tips to get even higher win rate at the end of the video. Let's begin. So 1 rectangle is gonna equal to everything, and that means the entry confirmation is gonna be coming out of the rectangle and it's gonna be inside the rectangle, and then the stop loss is gonna be above or below the rectangle. Take profit is gonna be away from the rectangle. So if you notice, it's a full trading plan just based on this 1 rectangle, and you will know what this rectangle is. I'll explain everything in details. Also, to make your life easier, I made a free ebook. You can have access to it in the description. It goes over all the steps, all the checklists, and all of the confluences that you can actually apply to have a higher win rate. So it's a free, just make sure to grab it in the description. Now, the goal of the strategy is to catch high reward to risk trades. So not the typical 1-to-1 or 2-to-1 and then go and break even. No, you'll be able to catch 5-to-1, even 10-to-1 reward to risk trades, and I'll show you how. There are actually trades that I've taken myself giving me 10-to-1 and 15-to-1, and that's actually my approach in each school with my students. Now, you're going to be also focusing on list trades. That's going to actually equal to more money. You will keep your trading plan simple. This plan is going to work on all pairs, so you can trade forex, crypto, futures, etc., anything. And then it works any time of the day, so you'll have a lot of flexibility. However, at the end of the video, I'll give you a specific time that if you focus on, you can even get a higher win rate and higher probability conditions. Now, the goal of the video, and hopefully after watching the video, you'll be able to catch trades like this with high reward to risk, trades like this, almost no drawdown, and price just keeps going into your direction. So you'll learn how to take trades like this when you master the strategy I'm going to give you today. Now, one quick note is that no one will teach you this. The reason is that I built it myself after 7 years of trading, and in this video I'll just teach it to you for free. Now, before we start and master the strategy, we need to understand these 3 concepts. First of all, direction, strength and weakness, and the whole strategy depends on this concept. And then the pattern, the one thing that we can actually apply to this, because I've talked about this strategy previously. I'll have the links in the description. It's going to give you the overall picture. But in this video, we're going to be focusing on a specific pattern that we can actually only focus on the high probability conditions for higher win rate, higher reward to risk, and then less trades. So instead of catching and focusing on every possible high and low, we're going to be looking at a specific pattern, and that's going to limit a lot of losers. So we also need to understand that pattern. Now, one more thing is I want you to watch the video until the end, as I'll go over 3 tips or secrets to even get higher win rate using this strategy. So do not miss that. Now, before we continue, just a quick thing. Everything I've learned over the last 7 years, the frameworks, the system, the way I read the market, it's all inside my community, Edge School. That includes the Edge model, the same strategy I use to find those 5-to-1, 10-to-1, sometime even 20-to-1 reward to risk trades. And I take those trades live with the community. If you want to learn the full system that I use and trade like me, there is a link in the description with all the details. If you're not ready yet, no worries. Let's continue today's lesson. Now, the first concept to understand is the direction, because we're going to be looking at highs and lows. We're going to be looking at some setups. How do we identify the direction? There are a lot of different ways. We can use moving averages, either the 50 or the 200. We can use CCT or candle continuity theory. We can just depend on the market structure or trade off a higher time frame key level. All of these, and you have the freedom to use any. For this video, we're going to be focusing on moving average using the 50 or the 200, just to keep it simple. Now, to use the EMA, you're going to go to Trading View, to the indicators. You're going to look for EMA, moving average exponential. You're going to go to the settings and have it as 50 or 200, depending on what you prefer. And now you have the moving average. Now we're going to stick to the moving average for the direction. And the reason is it's the easiest, most basic, and most mechanical way to identify direction. That I'll focus on EMAs on this video. However, feel free to use your own method to identify the direction. So you either CCT, market structure, key levels, anything. The simple way to use the moving average is when we have price above the moving average, we're going to be looking for longs. We want to have valid structure above. And when we're below, we want to have valid structure below. And we're going to be focusing on shorts and selling below the moving average. Now, the next concept, and this is very important, And it's the, I would say, the core of the strategy of today. It's strength and weakness. What is the difference? Now, my application of the strength and weakness is, if we have a low, consider this low as a key level, because it is actually a key level, and this high as a key level. It's an area where there are a lot of orders, where there is a decision here. Decision is going to be made. Are we going to be going above, or are we going to be reversing at this high or low? Now, when it comes to strength, strength is about disrespecting a key level, in this case a low. So the moment we actually closes below with just one candle and hopefully displacing below, that is what I consider a strength. That is what I consider a continuation. So strength most of the time is going to equal to continuation. It means that price is going to go below. Weakness, on the other hand, is the opposite. Whenever we have a key level and we're failing to close below, and all we do is go below it and then close above, that means there is a lot of weakness here. And weakness in this case is failing to close below this low. And in a bullish scenario, or actually in a bearish scenario, when price goes up, because a bearish scenario would mean reversing, that means we have weakness at this high, and I want price to close below the high. So in this case, we have weakness, and that means we have no breaker structure. That means we have a potential reversal, and this is the core of the strategy of today. Now, in the previous videos, we only focus on weakness because that's the main core of the strategy. However, in today's video, we're going to be looking at our pattern, which will have both strength and weakness at the same time. We want to have strength on our side and weakness also on our side. We want to align both of these on the same side, and you'll understand this in the next slides. So our pattern is going to be this. We're going to be looking for this specific pattern as our first, step. It's the context. Now, the pattern is going to be price is going lower, and it's a pattern of market structure. Price is going lower, so I know that, okay, we are bearish here. We go up as a retracement, and there is a big difference here when it comes to price behavior analysis, and this is something I've talked about before, which is if price is coming like this into my key level, I know that this is going to be a good key level to enter off. And why? Because price approached this in a retracement way. But if price does this strongly, I know that there is probability that the key level is not going to work. So if you notice here, price is coming up as a retracement, closing below. Now, sometimes it's going to take the high. Yes, I want to also consider this, and it's still going to look for continuation below. Now, what I want to see is, as we said, we want weakness and strength at the same time. Weakness is going to be at the origin of the move here. So I want price to fail to close, or even if it just closes one candle and then go lower, or not displacing above a high. So what I prefer to see is no closure above this high, then going lower, and the last low or the last two lows, we actually break below them strongly, and that is strength. So we have weakness here at the origin of the move, and we have strength at the lows here. We break structure, and as price was going down, we create an imbalance as well. Whenever we have this weakness and strength and a creation of an imbalance or just any key level, that's our pattern. That's where we're going to be looking for continuation of here. As price goes inside the imbalance, we're going to be looking for our continuation, but in a specific way by using the rectangle that we talked about in combination with this pattern. So the first step is looking for this context in your chart. Weakness, strength, imbalance created. Now, to focus on higher probability highs and lows, we want to look for highs and lows that are inside imbalances or maybe near imbalances. We're going to be also looking at sessions highs and lows. We're going to be looking at market structure highs and lows that are part of the pattern that we've talked about. And we're going to be looking at overextended reversals highs and lows. These are levels or highs and lows that you can look at. Now, the overextended reversals highs and lows means that as price going up, okay, going lower, going up, and it's overextended even from the moving average. As we go lower, we go up and then we reverse, because now what do we have? We have overextension. Price has been moving up aggressively, and now it can't reverse here in order to rebalance this range, in order to have a valid retracement. So this is the overextended reversals highs and lows. We focus here on quality more than quantity. Why? Because if we think about this, 10 trades at 60% win rate is going to outperform and make you more money than 100 trades at 50% win rate. So 10 trades is actually better than 100 trades. That means more trades does not equal more money. And that's what I want you to understand before applying the strategy. We want to focus on quality other than quantity. Now we're going to go over the 3 steps, step by step. I'm going to explain everything and then we go over the examples. And there's only one purpose behind these 3 steps. And it is catching 15-minute high probability liquidity sweeps, or you can call it fake outs, using the 1-minute chart. So when we have this time frame alignment, 15-minute and 1 minute, and then we catch trades that are, based on the 15-minute, but when we have an entry, a sniper entry on the 1-minute chart, that's when we have that high reward to risk. So that's what we're going to be doing. So the first step is going to be marking the 15-minute high or low. That is part of the pattern. So we want to identify the pattern, we want to identify the trend or the direction, and we want that high or low to be inside or near an imbalance or key levels, because we want 2 things to happen. We want a fake out and then a key level or an imbalance. That's what we want to see. Now, mostly I'm going to focus on imbalances also to make it as mechanical as possible. But for me personally, when I trade this, I can look for any other key levels, and these key levels I teach in my community at school. And there are a lot of ways to actually trade this. But for this video, I'm going to be only focusing on imbalances. So that's the first step. We identify that high or low, and we have our eye on it. Now, the second step is to wait for price to close below the high or above the low. That means I want to see weakness at that high or low. Now, we already know that we have the weakness and the strength in our pattern, but now we want to see at the high or the low, we want to see weakness in there. And that is your wick rejection. So that means if we're focusing on a low in this case, I want to see a wick rejection. And that is our weakness. Whenever we have this, that's our step. I want the candle to close. So if this is a 15-minute candle, okay? I want the candle to close, and then I'm going to go to the third step. The third step is going to be drawing the rectangle. So after the candle closes, then we have the low, and then the closing price of this candle. We're going to take a rectangle, draw it from the closing price to the low, or in the opposite scenario, when price is going up, we're going to be marking the high to the closing price, and we're going to be watching that next 15-minute candle open. And then we're going to switch to the 1-minute time frame, and the 1-minute time frame is going to decide everything for us. So you either give the entry or you don't, all based on the 1-minute time frame. Now we're going to go over examples. You will learn how to draw the rectangle in real time, how to identify the pattern, how to identify everything, and then the entry at the end. Now let's start with the direction here. If we go to the 15-minute time frame, you would notice that as price, this is gold on the 15-minute time frame, we had a bearish move. We're ranging here, we had a bullish move, and now we actually broke structure here, another breakout structure. So if you notice, breakout structure here, another breakout structure here. So we can actually look for continuation to the downside, maybe to somewhere in here, because I always love to look at my ranges and the retracement. I can see that this range here did not have a valid retracement to the key level. So maybe here to move here and then have valid retracements. Zooming in here to the current price action that we have, we can notice that we do have this weakness. That's one thing, and we could actually take some trades here, but I will show you I would say the textbook example so you can know what is a perfect scenario looks like, and then you can play with it. Now we do have a breakout structure, continuation, also another possible trade here, another breakout structure. So now we are bearish here, and we're respecting the 50 moving average here to the downside. Do we have, actually, if I go back here, I can see that we do have this weakness. So that's one thing. We have weakness failing to close above a high, a lot of weakness going lower. And then finally, what do we have here? We have a breakout structure. So in this case, we do have that type of pattern that we talked about, which is the weakness and the strength. And we're below the moving average, and we're mainly bearish here. So playing the price action, okay, we started a retracement to the upside. So I can know that our pattern is starting from here to here, because we do have a breakout structure, meaning strength, and we have a fake out, which is another word, weakness. So we do have all of this. We have an imbalance here, another one here, fully filled, but we have this high that is inside of this range that we're talking about, but it's inside of an imbalance and it's not fully filled. There is a small part of it that is not filled. So I'm going to be marking this and I'm going to be looking for, now we do have also this one, this high, but this high is fully filled. So it already filled the whole imbalance. And I mean, there was a possible trade here as well, but this is, now we're going to be also focusing on specific times of the days, but this is actually another possible trade that you could have taken. Actually, we're going to be discussing this later. I have not seen it before, but let's look at what is going to happen now. We started going up. This is London starting, and notice what happened here. Now, this is the second step here. The first step was identifying the high or low, where the possible rejection is going to be happening at. But now, second step happening, which is the candle getting rejection and closed below that high. So now I know that, okay, this is weakness because we do have weakness here. Then we have a strength, and inside of this main range that we are trusting here, it looks like we have weakness. So possible reversal could be happening from here, and we could be catching this high, maybe to the downside. Now, what is the next step? Is to draw the rectangle. And in this case, where do we draw the rectangle from? From the closing price to the high. And what is our entry? The moment we have a closure below this level on the 1 minute time frame, it's going to be our entry. So the moment a 1 minute candle closes below, that's our entry. Now, what do I prefer a lot of time? I prefer for price to open a bit higher, create a higher wick for the next candle, and then go lower and close below. And that's going to give me a better entry because I could have my stop loss above the new wick. And that's one way to understand the CCT. And the whole framework here is only one way to trade the CCT. CCT is the candle continuity theory, and there is a new course actually being posted on this on eBook. So it's been only a few days since it's posted. Now, forget all this, focusing on this here. That's the wick. What we're going to be doing is going to the 1 minute time frame here. And all what we do is take a sell when price closes below this rectangle. And as I said, the whole trading plan relies on this rectangle. Now, playing the price action, price closes below. Now, I'm not going to consider this as a good closure, at least below this low, okay? I'm not liking this. Okay, now we close lower. We can take a sell here at this closing price, or sometime if the closure is way too far, you can have a re-entry at the rectangle, okay? And you want to have your stop loss above the rectangle. But if at that time we have some weakness inside the rectangle and then broke below, we can have stop loss here, because now we have a valid high to actually, have a stop loss above, where we had a weakness here. Now in this case, because I'm not seeing a valid retracement here, I'm going to have stop loss above the high. And then what can we target? Now in this case, we can actually take fixed reward risk if you prefer. So you can just look for 3-to-1, or you can target some market structure level. So I can see that because we've been moving bearish here, breaking structure, I'm looking for another breakout structure below this level. That is almost a 10-to-1. So playing the price action, if you notice, price started going lower. We had another imbalance in this case, but it was fully filled here already. But then there was another sweep, okay, going lower, playing the price action. Price came back to the entry. So after 5-to-1 came back to the entry, you might be out here at 4-to-1, or if you're someone who's looking for high reward to risk, you can let this run. And the moment you let it run, it's still respecting the moving average, if you notice, and then immediately going lower, giving you the 10-to-1 and actually much more, 13-to-1. This is how you catch those turning points. This is how you catch the extreme reversals, okay? Playing the price action, I want you to notice what's going to happen here. Now we continue lower because I've seen another example here. Okay, so what is this here? If I ask you this question, what is this here? Price failed to close below. And also here, I can see this as weakness because it did not even close below the wick here, the first wick, and then immediately going higher. So I can consider this as weakness. And what happened after? We have a breakout structure. So what we have here is weakness and strength, and that is our pattern. And then what do you notice after? We do have this imbalance that has no low. Actually, this I can consider this as a low that is near the imbalance. Another imbalance, which is here, that has a low here. So if you notice, we've taken the low, but did not fill the whole imbalance. But this was a bullish candle, which I cannot trade, because when we are looking to catch the reversal, it needs to be, so for example, if you notice here, we've taken the high, but with a bullish candle. Now here, when we take the low, it needs to be a bearish candle as well. Now what I'm actually looking at is this low here, only if price takes the low, because that's our pattern here. It's from this low, which we have weakness, and maybe until here when we start the retracement. Okay, so we start the retracement. I want this low to be taken with a bearish candle first. We're going to be drawing our rectangle and we can go from there. So if you notice, the retracement started here, going lower. Let's see what we have. Okay, taking the low, but with a bearish candle. That's a valid setup. Now we're going to be drawing our rectangle and we go to the 1 minute time frame. So we have a lot of scenarios here, right? Is price closing higher first? I can enter immediately, or add the rectangle, or price making a retracement first, going higher, and I can trade after that too. So let's see. So price immediately closed higher. In this case, you have two setups here. I mean, two entries. One is immediately at this candle, because that's the candle that broke above the rectangle and stop loss goes below. Now for even better reward to risk, what you can do is set a limit order at the rectangle, okay, and then stop loss below the low. Now, yeah, you could actually split between the two, because there are two possibilities here. We don't know exactly what's going to happen. Either price comes back here as a retracement or just start going higher from here. What can we target in this case? Let's see. What can we target? We can target this new structure here. And what we can target too is this, maybe a key level inside this range here. So that's already a 10 to 1. I would say, actually, if you notice, we do have this high that is inside of an imbalance. So I can target this one actually, okay, for 9 to 1. And the other entry is only 3 to 1. So you notice a big difference between the two. We go back to the 1 minute time frame to see what's going to happen. So playing the price action, price immediately start going higher, okay, with no retracement. So this entry would not be valid, and this one will be valid. You're taking this trades after the closure out of the rectangle, okay, playing the price action, and price immediately goes higher into your take profit. Your take profit one, and then it also continue higher after that. So if we go back now to the 15-minute time frame, so all you do is what? Looking for our pattern, which is weakness, strength, looking for a high, and then looking for price to take that high, but with also weakness, and then we draw the rectangle and we take a trade of that. Now I found another example on Eurodollar here, and it's one that is only missing 1 point, but I would pass on it. And why? Let me show you. Now if you'll notice, we have a valid structure going lower, we have an imbalance here, and price came back to this imbalance, fill it exactly, and goes lower. Now in this case, in my opinion, there's no valid structure, a breakout structure. So the part of the strength is still not there. The part of the weakness is here. So I can see that we only close one candle above, but the reason closing above this high, actually two candles, the reason is we're only going to this imbalance. So if you switch now to the 30-minute time frame or the 1 hour, you'll only see this as a wick. After that, closing immediately lower aggressively, and then reclaiming the moving average as well. So in this case, what I can do is consider this as weakness, and you have the choice to either, consider this or just stick to the mechanical way, but I'm showing you all the possible examples or the scenarios. Now we go lower, we create an imbalance here. We fill part of it and then goes lower. So now we're still not having a valid breakout structure because I'm not seeing any strong low that was broken. But we have the weakness, we have the imbalance, we have the high, all of these things. And then what do we have after? We have rejection of the moving average and rejection of the imbalance after taking the high. So we can consider this also as an entry. Now, how do we enter based on this? We're going to be drawing the rectangle here. We're going to go to the 1 minute time frame, wait for price to close below the rectangle. Okay, so playing the price action, this is the candle that closes below. We're going to be entering here. Stop loss above the rectangle, slightly above, okay, in case price went up Now, because this is scalping, you're going to have a lot of tight stop losses. So you need to have an account with low spreads, okay, or raw spreads. Now we're going to have stop loss just above the high. There are some times where price is going to retrace to the rectangle. So you have the choice to either, so you see reaction of the rectangle. If you enter based on this, you're going to have the perfect entry, maybe, okay, price going lower. So sniper entry here, if you use the retest of the rectangle, and then price going lower, what can we target? Maybe this level as our first target. So this one here. And then we can go to the 15-minute and look at some other key levels. So I can see that this imbalance was not filled here. And we do have also this low that is inside of an imbalance. So all of these as our targets. Now price came to this level, retraced, going lower. And then let's see what happened after. Huge move to the downside. That gave you around 12 to 1. With the normal entry, it's going to give you around 7 to 1. Now, these are 3 tips for even higher win rate and to focus on higher probability conditions. Now, the first one is going to be about the timing. Only take trades in these time periods, and these are the kill zones or the sessions. That's where most volume is. Now, 20 to midnight, that's going to be the Asian session. And even though it's not going to be as volatile as London and New York, however, it has a clean price action depending on the pair. And there are a lot of setups that you can take in this time period. 2 to 5, which is the London, and that is my favorite one. 7 to 10, which is the New York. All these times are in EST time zone or New York time zone. You can have a session indicator. You can use the indicators that I have. So just make sure to look up Mulham trading indicators, and you're going to have a session indicator that's going to highlight these to you. Now, one high probability condition is when Asia high or low is taken on London, but then followed by a breakout structure. You trade the continuation in the direction of the breakout structure. So this is Asia on blue. This is London on yellow. When price is ranging on Asia, then the low or the high, in this case, let's say a low taken. So a low is taken, but then we have weakness. So immediately reversed up and we have a breakout structure. What is this? We do have weakness and strength. And that is our pattern. But now we're also blending the timing aspect in this. And then we do have an imbalance. We have a low. We can trade this low here for the continuation to the upside, targeting Asia high. So that is one of the ways that we can actually implement timing to have even higher probability. And make sure to try this on euro dollar, pound dollar. That's a model by itself on the euro dollar and the pound dollar. Now, one more tip is you can still look for continuation in New York if London created a breakout structure beyond the Asia range. What does that mean? If Asia did this and then London did this and then broke above, so London broke above Asia high, we can look for continuation in the same range of London. So if London breaks the high of Asia, but before that also we had weakness at the low, which is something like this, weakness here, breakout structure, New York is gonna look like this. We can have continuation of the London range to the upside in this case. So that's another tip that you can also implement if you are focusing on New York. The next step is to focus on the 50% of the imbalance. It's the most significant level in an imbalance, and it's actually the level that gives the sniper entries. So you notice this one, and if you go back to the examples that I showed you earlier, you will see that a lot of these are on the 50%. So even if price does not reach the 50%, the second retest or the high is going to be into the 50%. So imbalance here, you're going to focus on 50%. Even if the first touch goes like this and then go up, you're going to look for the second or the weakness from the 50%, and that's going to give you the most safe and sniper entry. Now the third tip is about continuation versus reversal. Now for this one, it's all about where price is relative to the moving average, because we're using 50, for example, or 200. Now let's say we're using 50. As price is close to the moving average, we're looking for continuation. As price is overextended of the moving average, so you notice price, because the moving average is the mean, price is gonna always come back to it, go away, and then comes back. So whenever price is away of the moving average, it tends to comes back to the mean. And that's what we are trading here. So price is close to the moving average, we're looking for continuation with the moving average. Prices away of the moving average, do not take longs here. Take shorts, because now we're overextended only when a setup is valid. But then going lower, close to the moving average, continuation, overextended, reversals, continuation, and here, if price goes all the way here, give me the setup, I'm gonna look for reversal to the moving average. So that's how we understand, are we looking for continuation? Is it valid, or is it more gonna be a reversal pattern? So that's the end of the video. Hopefully you learned something new, and if you have any question, drop them in the comments. Let me know what do you think of our trading plan today. Make sure to share the video with others, leave a like, leave a comment, and then make sure to check out School, my community where I trade with my members live, and I do have a lot of courses there. Some of them are similar to what I'm teaching you here, and maybe even better. So that's it for today's video, and I'll see you in the next one.